Okay, welcome to our modified Venture Studio collaborative discussion. I am Carey Ransom, live from OC4 Venture Studio. I'm the only one here, so I had to escape my home office to actually get sufficient bandwidth as I'm competing against my kids who are all on Zoom for school. So this is my escape to provide a quality experience to you guys. But I am really excited to have Elliott Parker, my longtime friend, and Kristian Andersen, also I will call a friend as well, joining me from High Alpha in Indianapolis. And what we were hoping to do is just have a really a conversation about the state of venture studios, our experience with them. Kristian was responsible for starting with a couple other partners a really, really prominent venture studio in Indianapolis a few years ago. We all had the pleasure of getting together before the crisis at the original, I think, as we would all consider it, venture studio at Idea Lab, what feels like a year ago now, but not that long ago. And so I thought maybe we could start, let both you guys introduce yourselves, and then we could talk a little bit about kind of the history to date and where, each of us feels like the current state of venture studios is at this point. So Elliott, you want to start?
Sure, I can start. So I'm Elliott Parker. Nice to see you all. See some friends on here. Good to see you guys. I am CEO of High Alpha Innovation, which we'll talk about a little bit. It's a spin out from High Alpha. We are a team that works specifically with corporate partners to apply the venture studio model to create new startups together. I've been at High Alpha for a couple of years. Before that was at a consulting firm called Insight for a while. And before that worked in corporate venture capital and lots of startups along the way. And longtime friend and classmate of Carey's.
That's good, thanks. I'm Kristian Andersen. I'm a partner at High Alpha. My background is I ran a design firm for the better part of 2 decades that I ended up selling to a private equity group early last year. But during that run, I had the opportunity to start a seed stage venture fund and launch a handful of software companies out of the design firm that ultimately raised, venture dough and scaled, and a couple of those have exited so far. So kind of a background, very design focused background, but have spent my entire career at the intersection of SaaS technology in particular, and what I call kind of redneck, ragtag finance. So kind of Midwestern, seed capital. And then 5 years ago, we actually celebrated our 5-year anniversary.
Amazing.
Earlier this month. Founded High Alpha with my 3 partners, Mike Fitzgerald, Eric Tobias, and Scott Dorsey. Three consummate professionals that spent the bulk of their career as well in SaaS. I'm the lone. There's 4 partners. The other 3 were all at Salesforce via numerous acquisitions, most notably a company called ExactTarget that Salesforce acquired for just shy of $3 billion in 2014.
Very cool. Well, thank you for that. So as I said, I think it'd be helpful to just sort of orient. Kristian, I'll pick on you, I guess, given that you have the most history in this venture studio world. How do you think about the evolution of it, and obviously the recent really surge in the number of studios that have started? I guess both from a historical perspective, you had somebody like Idea Lab that's been at this for a long time doing it their way, and yet it's somewhat recent phenomenon that so many have shown up. Why do you think that is?
Isn't that funny how that timing of those things work? And you see that, of course, in the investing world in particular. You can spend 10 years looking around trying to fulfill a particular thesis and can't find a company doing it, and then you turn around and there's 20 companies pursuing it. It's interesting, like when you buy a Honda Civic, all of a sudden you notice
Sure.
Honda Civics everywhere.
Yeah.
So I don't know how much of it is just that confirmation bias and how much of it is, but yeah, Idealab notwithstanding, because they're just so
Anomaly.
OG and have been around so long. I kind of view like the modern kind of incarnation of this model being Rocket Internet, actually. And, that was the big high profile, the Samware brothers. You couldn't open up a copy of Fast Company or Wired without reading about what they were doing and how ambitious they were. And, I look back at my experience running a design firm and partnering with external folks to launch software companies. And for me, the idea of using an existing platform or a company to start other companies didn't feel quite that foreign. And I can remember, Science Inc. and BetaWorks being two kind of early exemplars of what at the time was called a startup studio. And, I make a distinction between startup studio and venture studio, a very stark distinction. And when we started Alpha 5 years ago, that's what we wanted to do. We even called it a startup studio. And we decided, we thought we knew how much dough we needed. And we went out and, by the way, I know I'm going off the rails, but I'll get there eventually. We went out to go raise money, and we were so fortunate. We ended up with two competing term sheets from two really storied investors. One was Emergence Capital on the West Coast, a phenomenal SaaS investor, first money into Salesforce. Most recently led Zoom's last private round. And Greenspring and Associates, which is a fund of fund on the East Coast. And so we had these two term sheets, and we were, which was a wonderful problem to have. And Jim Lim, the GP at Greenspring, said, hey, you know what, guys, why don't you go with Emergence on the studio? And why don't we become your anchor investor in a venture fund that you can use to help support your earliest companies? And we were like, that's okay. That sounds cool. Let's do that, right? So we kind of cranked up our ambition level on both fronts and ended up raising more than we initially set out to on the studio front and on the fund side. And at the time we were thinking, how do we talk about this differently than what Science and BetaWorks and Expo are doing, who are investing off their balance sheet essentially. And we said, well, this is closer to venture capital. This is really the next evolution of venture capital. Why don't we go with a mashup and call it a venture studio? I'm sure someone used the term before we did, but we go around telling everyone we invented it. And I would prefer it if you guys would help us keep that charade up.
Sure,
so,
happy to.
So that was 5 years ago. Now, if you look at like GSSN, which is a convening organization that we just have a lot of admiration and affection for, there's probably 200 entities around the globe that are using the venture studio moniker. And as any industry that's in its nascent, emergent form, there's a lot. You peel the covers back, and those organizations look very, very differently.
Yes.
But I think there was something about the amount of wealth that had been created and put into the hands of founders over the last 10 years through internet and software companies. And the fact that there was this, basically the cost structure of experimenting with new business models had fallen so precipitously that you had these really wealthy founders, entrepreneurs who had done it once before, who would, if they had had their druthers, would have loved to have started 10 companies. But back in the day, you needed 10 million per to get it off the ground. Were able to experiment, had the luxury of experimenting, and the cost structure of doing so had changed so dramatically that those two or three constituent elements came together. And I think that's why you see the proliferation of the model. And if you look at the funders, the people who were backing this, I would argue it was harder to raise dough into a venture fund 5 years ago than it is today. And I think it's only going to get easier, even in light of our current context.
Well, because I think to your point, I mean, the part that really resonates with me, as you guys know, I've been a sort of a serial startup in operating investor, as I describe myself, for a long time. And I started to think about, okay, is there a way to do this in a more leveraged, parallel way? Which is sort of where I think it's not just a capital leverage, to your point. There's experience leverage. There's even various elements to the business model of starting.
No, the capital
SaaS
piece is actually, and it's certainly not insignificant,
Sure.
but it's not number one. I mean,
That's right.
and it depends. If I have blinders on. High Alpha is SaaS for businesses.
Mm-hmm.
It's enterprise cloud, B2B SaaS. It's a very particular type of business, but those businesses, unlike consumer web, for example, which is a bit more of a hits-driven business. I mean, you can have a great idea, you can execute really, really well, and if the dominoes just don't fall the right direction, you'll be out of business. SaaS is unique in that, there are playbooks. There's a go-to-market playbook. There's a product development playbook. There's a talent and recruiting playbook. And you can't just run the playbook and be successful, but if you run the playbook correctly, you're 80% more likely to be successful. And that's why there's this leverage, the capital leverage for sure, experiential leverage for sure, but maybe even put a finer point on the experiential piece. There's just proven ways of validating ideas, of advancing to business conception, of recruiting fundable CEOs, and that's what we're really, really focused on at High Alpha. There's almost 40 of us now, and we're really focused in our second chapter at High Alpha 2 of building franchise value. So what are the muscles, what are the processes, the playbooks, the proprietary technology we can build that you layer on top of that capital stack to get you exponential leverage?
Mm-hmm. Yeah, I think that's a great example on the history side of like where you guys are evolving. Elliott, what things?
I was just going to
you've
say,
been there now a couple of years, yeah. So I'd love to hear.
Think about. The venture studio model just feels right at this time. You think about the how much we've learned collectively, over the last 20 years about how to fund, create, and scale companies. Right? It is. You think about, to Kristian's point, what it took to get a company off the ground 20 years ago is very, very different from today. We've learned a lot. And the analogy I like to use is and this is probably a very poor analogy, but it's useful. I don't know if it's true, but it's useful. And that's the analogy of the movie studio where, 100 years ago, if you wanted to make a movie, you'd have to create a company. And you'd have to go hire screenwriters and actors and someone to operate the camera. And once the movie was done, everyone would go their separate ways and you'd shift to distribution. And this was very difficult to do. Along a long way, somebody realized, we should build a movie studio. We should have all these people on staff, start to get some pattern recognition for these ideas, start to reduce some of the risk, and get more efficient at just spitting these movies out and making them successful. The same model applies now to creation of ventures. We've learned so much. Bring the people on staff, get the pattern recognition, do it systematically, get these things launched and scaled.
Yeah, totally. It totally makes sense. So talk a little bit, Elliott. You're now sort of taking this to some extent to corporations as a model for them. At a time like this, I always get a little bit happier as an entrepreneur because I feel like corporate innovation is going to die because that's the least comfortable muscle they have. And they only do it out of necessity once M&A or the core isn't enough. And the last stretch of this long cycle has really gotten them to have to get involved in corporate venture, get involved in corporate innovation. I'm not convinced it's more comfortable for them now than it was before. So how are you thinking about the need, obviously how you were planning for it, but even on the other side of this, as we start to reorient to what the new world order is going to be?
Yeah, it's such a good question. And there's a few things that a few beliefs that anchor our approach in this bet that we're making on matching up venture studios with corporations. First of all, we believe corporations are one of the greatest inventions actually in the history of mankind. In terms of the computers that were in the phones that we're talking on right now would not exist without people coming together in corporations to collaborate. And when corporations are effective at innovating, it has tremendous positive impact for the world. When they're not, there's great cost and great inefficiency. And so if corporations can get better at innovating, we all benefit. And one of the things that we've learned at High Alpha with our venture studio models that, as we mentioned, you can be systematic in the creation of startups. There are certain types of ideas that are better pursued through a startup as a vehicle than through a corporation. And the bet that we're making is that you can team up this approach of systematic venture creation for those certain types of ideas that would be hard to pursue internally. If we can team up with a corporation that can bring some type of unfair advantage to those startups that we can create together, these startups can get launched and scaled faster than they would otherwise.
Sure.
And so we've got some experience doing that, right? We would at High Alpha now we've done this a few times. When I joined High Alpha originally, we found that corporations were a great source for ideas for us, and just saw so much potential there. We decided to spin that operation out at the beginning of the year, focus on it 100% with the team.
Very cool. So Kristian, you talked about the studio as something that some investors actually had interest in. Was their perspective more about proprietary opportunity deal flow, or was it thinking that there was actually real investment, enduring investment value? I mean, you talked about franchise value in the second chapter, but the first version of it, what was the driver for them as investors versus traditional operating companies?
Okay.
Sorry about that.
No, it's fine. It turns out I muted myself when Elliott was talking, and it turns out I can mute myself, but I can't unmute myself.
I think I think I implemented that control, so we'll.
I won't do that again. I'm at home and I have 6 children, so I'm trying to protect all of your guests' sanity here by doing that. You know, why does nobody have their video on? Who's joining us on this, by the way? I find that disconcerting. I'm just looking at a sea of proper nouns and it's hard enough to do these over video without being able to read now we're talking. All right. Thank you, Evan. Yes. Thanks. Okay. Yeah, I would say a twofold rationale for making the investments. I think there was probably, twofold. One was making a direct investment in the studio and treating the studio like a startup. So collecting equity in the studio, knowing that it would build enterprise value over time and have terminal value because of the returns that flow to it through the studio company.
From the ownership in the company.
Correct. And I think the other catalyst, which I would say has turned out to maybe be less important than the investors anticipated early on, was going to be getting early perfect information on deals well in advance of the stage which they might invest. So, you know, some of the investors early on, you know, we just talk about High Alpha generically, but there's technically High Alpha Studio 1, High Alpha Studio 2, High Alpha Capital 1, High Alpha Capital 2, and there'll be a Studio 3 and a Capital 3 and so forth. There are some entities that are persistent, like the management company, but the vehicles where the cash and the equity reside are unique and have expiration dates. I think there was some belief early on that having a super pro rata ability to invest in the companies coming out of the studio would be more important than it ultimately was. And I would say that most of our investors on the studio side are betting on the studio's ability to, you know, one of our LPs is Foundry Group, Foundry Next Fund out of Boulder, and Lyndall Ekman, who runs that the fund of funds there, says, I think he might be quoting Brad Feld, I'm not sure who originated it, but says that we're equity collection machines. You know, that's the role of the studio. What makes us different from the venture fund is we make our own luck. We look at what companies we would like to exist and be able to invest in, and then go make those. And over time, I think the investors on the studio view their core investment in the studio as the star of the show. That's not to say that they haven't and won't and will not continue to make discrete investments in individual portfolio companies as time goes on, but I would say it's probably secondary to their core investment thesis. On the capital side, they view us as traditional venture capital allocators. So their interest is buoyed by the fact, I use this term perfect information. We don't actually have perfect information, but we have pretty darn good information as VCs investing in companies that we started,
Sure.
run by founders that we recruited. And so those folks are betting on the fact that our returns are going to be even better than a traditional venture fund, because we are able to exert a significant amount of control over the vector of those businesses. So they're investing in us like those fund of funds are deploying capital into our funds the way they would a traditional venture fund, but they're doing so with the belief that we can invest earlier with better information and ultimately drive better returns.
Yeah, that's an interesting one. I mean, I thought it was fascinating when we were all at Idea Lab, how Bill talked about the alternative value of the Studio 2, which was when some issue arises downstream and everybody involved in the capital stack is looking at each other like, who's going to come rescue this? And the studio is really the only one that has the capability to step in, either because they have the history or the information, or for that matter, the capability.
Yeah, I think that's right.
So I think that's another interesting perspective as you think, at various outcomes that could occur. How have you guys, as you've evolved, I mean, you talked particularly about this idea of we're going to go create a company that we believe needs to exist. How have you thought, we've obviously taken a pretty different perspective thus far at OC4, and that we've said, we think a key need in our market is helping the entrepreneur who has the commitment, has the passion, and needs this superpower of help around them to really see it have a much higher likelihood of success. How are you guys thinking about that as an alternative to really still executing on a better venture outcome model versus this, we're going to derive it from scratch from within?
Yeah, we and Elliott's really does a great job of articulating this as well through the lens of innovation. But we're idea source agnostic at the core, right? We just want to be involved really, really early. We've launched 20 companies. And what I'm going to share with you now, I'm making up, but I believe it to be directionally accurate, meaning I don't have the exact numbers, but I would argue that over half of those were ideas that were sourced, like were created inside of High Alpha. Like the notion to start that company did not exist outside of our four walls. And we validated it, put it into a sprint week, decided to start it, and grew the company. The other half, or call it 40% of the companies we've launched, have come to us either through relationships, as Elliott noted earlier, with big companies who've like, hey, and we've done this, a few times now, and we view those companies as co-founders. So maybe 3 of those companies from collaborations with big corporates. We've launched a couple through partnerships with other venture funds that have said, we have a particular thesis. We've been looking for a management team to back for 3 years, can't find them. Please start this company and we'll fund it, right? And we love that, because in that case, that relationship is bringing kind of a pre-built funding source along with it. When we partner with big cos, it's oftentimes bringing a pre-built relationship with a customer. We like that, But then the third kind of modality, I guess, would be entrepreneurs coming in off the street saying, I've got an idea, or I've already got a product, and I need help, right? I want to build it or grow it inside of a studio context. And honestly, we love those, because great idea, appealing market, plus passionate, dedicated founder that has a deep-seated sense of ownership. That's the trifecta. When we're building our own companies, hey, I've got an idea. One of the first things we focus on now, this is not true 5 years ago, now is we must go recruit a passionate co-founder who can fall in love with this idea alongside of us as we launch it. And I would say we've gotten pretty good at that. We've got a robust executive recruiting function that's constantly looking for potential co-founders. Early on, we would start a company. We'd be 3 or 4 months in looking for a CEO. We pulled it off. It's harder. And the longer you wait to attach a co-founder, an executive leadership team to that business, the harder it is. And so I would say there's been a handful of very big learnings over the past 5 years, but chief amongst them is we need to bring co-founders in from Jump Street, whether it's our idea, their idea, VC's idea, Big Co's idea, it doesn't matter. So we need a big pipeline of founder talent, and we need mechanisms for them to attach to that idea as soon as possible. And the language we use is fall in love with the problem alongside of us, rather than, hey, it's been 6 months, we've got a product, we're in market, we have 9 customers, now we need to find a CEO. I mean, necessarily, that's just a different profile. It's more difficult. Yeah. But it's something that we can get a lot better at it, but we're so much better at it than we were 5 years ago.
Carey,
great perspective. Yeah, absolutely.
Add that one for a second. This is the hardest part for every venture studio, is finding good co-founders, and it's something that every venture studio is out there trying to crack. I think one of the things Kristian talks about a lot is the idea of momentum in the beginning. Momentum can come in many different forms. When we think about how we prioritize ideas, at High Alpha right now, we're launching a new startup about every other month. And to be able to do that, you've got to prioritize ideas that have some form of momentum. That might be a big corporation that says, hey, if you build this, create this as a company with us, we'll be the first customer or distribution partner. It might be an entrepreneur walking in the door with the idea as a form of momentum, saying, I'm passionate about this. I want this to become a real thing. All of those we think about our idea funnel. Those ideas that have some form of momentum attached go to the top pretty quickly.
Yeah, I think that's a great point. So as you think about the way you guys have done it, Sprint Week is a really unique approach that you've taken, where you're doing this on a fairly regular cadence that you've set. Has there been any thought about either sort of moving that to be more ad hoc based on when ideas come to you, or go the other direction and say, hey, we only want to do this once or twice a year because we think we get a different leverage by having cohort or class like others have?
I'll take a crack at this, Elliott, and you I know you've got lots of thoughts on this too. You kind of asked 3 questions, so I'm going to try to.
I ask a lot of questions.
I'm going to kind of try to triangulate those. No, we're married to we want to do 4 sprint weeks a year, and we believe that cadence serves a powerful role in how we run the business, and that it's a forcing function.
It's also cultural. I mean, I feel like it's in your culture too, right? Yeah. When I saw it,
I mean, there's a lot of reasons to do it, and I'm happy to camp out on the rationale for doing it the way we do it. But it's a powerful tool for recruiting. We're dealing with a founder. I mean, they're taking a huge risk. A talented founder, someone who's done this a couple times before, could go do it on their own. Why am I going to go do it with you guys? You guys are going to take a crap ton of equity. And I haven't worked with any of you folks before. I mean, I hear good things, but who knows, right? Well, we bring them to Sprint Week, and we lock arms for 4 days. And I think you'd be hard pressed to find a founder that's gone through Sprint Week that hasn't come out the other end and said, that was amazing. I had no idea a group of human beings could create that much in that short of a span of time. And so it's been a wonderful way for us to recruit and basically articulate our value. It's a wonderful way for us to assess them. Because, a LinkedIn profile and a few reference calls will tell you a lot, but it doesn't tell you the whole story, right? It's hard to really gauge the displacement of somebody's motor until you've taken it for a couple of laps around the track. So the Sprint Weeks are fantastic for that. And listen, we sign up for starting 15 plus companies every 3.5 years. And if we didn't have Sprint Week, you find yourself then in a role where you're just deciding kind of ad hoc, do we like this idea enough to start it? Which sounds like a good idea. It actually sounds like maybe you do more ideas, but the reality is there's a million good reasons not to start a business, and usually only a few good reasons to do it. And sprint week forces us to do it because we're going to run a sprint week, and by golly, we're going to start a business. And so far we've been shockingly consistent in that. I would say the one edit to how we run our process, maybe even versus just a year ago, is we've gotten more aggressive about also starting businesses off cycle. So in between sprint weeks, we've been on lockdown at High Alpha going on 6 weeks. We will start, in the next 2 weeks, there'll be 3 new businesses kind of instantiated outside of a regular sprint weeks cadence. So we're getting more aggressive about how do we, it's not either or, it's both and, as my wife says. So let's keep our sprint week cadence. Let's target starting 1 new company at least coming out of each one of those sprint weeks. But if we can layer on in between, we're gonna do that as well. And I would expect to see even more of that coming out of High Alpha in the future.
Very good. How are you guys thinking about the, I don't want to call it talent arb, but it kind of is, in that, like, as I think about it for OC4, we have a great roster of super accomplished, high caliber people that we're making available to these startups in the early stages, because they either don't know them themselves, they can't find them themselves. How are you guys thinking about that level of, I'll call it experience versus just sort of raw hands and feet in what you try to put in there? Because there's one to say, hey, we've got people that have they've got our culture, they maybe are junior, but they're hands and feet, and they know the High Alpha or the startup studio approach. Yeah. And then there's the other, which is like, these are people that if you can get 10% or 20% of their time, it's worth probably 50 to 100% of some cut rate or cut experienced person's time, right? So where you get leverage in people, how do you guys think about that?
Elliott, I feel like I'm doing a lot of talking here, and I'm happy to keep rocking and rolling,
like
but I want to make sure I'm being a good point guard and spreading the ball around too.
Take it.
Okay, all right. So nobody thinks their own kid's ugly, so I'll start with that. So you might want to take what I say feel free to take with a grain of salt. But we do have, of our 35, 40 folks, we do have a lot of young people, but they're killers. They deep experience in kind of SaaS background, and we've got a pretty good ad hoc fellowship program to get people not only indoctrinated in the culture, but in our playbooks. It's a really good place for talented young folks with 5 or 6 experience as operators to come flex those muscles. With that being said, we've got some top heavy talent as well. And one of the ways we're a company that doesn't make any money. So it's not like we go, hey, let's go generate more revenue so we can go hire more talented people, right? We're kind of capped at how big we can be headcount wise. So a few of the things we've done is we've created a operating partner role last year where we've started bringing in really seasoned operators, people who've got successful exits, oftentimes multiple successful exits from venture-backed companies under their belt. And they'll come in they're full-time operating partners, but they're part-time employees. And we'll embed them, each operating partner embeds into 1, 2, maybe 3 companies, and we'll kind of run to where the heat is, right? And they're very, very different, right? Some very, very go-to-market focused, some more kind of back office operationally focused folks. But your question kind of prompts an additional thought. I saw somebody mention in the chat, if we were going to do this over, what would you do differently? And I think it kind of maps to your question, which is by venture studio standards, we're big. Yeah. We've got big headcount, and yet there's no way we can hire experts in every discipline that matters that are operating truly at a world-class level. And we take the term world-class very seriously. Most people, world-class is just the best they've ever been exposed to, right? So we try to think, when we use the term, we try to mean it, we try to be pretty literal, like who's the best or who would be top decile in any given category. And I think over the last 4 or 5 years, we've basically made an attempt to build like 7 or 8 centers of excellence inside of our tiny little company. And I think recently we've had the recognition that you probably can't do that. You probably can't be world class at 8 things with 7 employees.
Just like a startup can't, right? I mean,
Yeah.
I think we spend a lot of time talking to founders about this idea that you don't need, unless you're going to get into the business of accounting, you probably don't need an A+ in your accounting. And if you're spending the effort to get an A+, you're not spending the time on the thing that is the business that you're trying to be world class in, right? So I think that's a really interesting point. Yes.
We've gotten, we're trying to be honest with ourselves, and I think one of the things you're going to see at High Alpha is a shift. And I won't be too explicit because we're kind of in the midst of rethinking this and remaking this, but what are the 2 or 3 things that we can credibly, and I don't know if it's 3 or 2 or 1, but I'm going to be optimistic for a minute. What are the 2 or 3 things that we could credibly be like the best at? Like if you're going to join a venture studio and you want help with X or Y, these guys should be in the top of your consideration set. And then what are the things where, to your point, we need to be highly competent at? You think about back office. I mean, a big part of the venture studio model is back office function. So HR and recruiting and finance and tax and accounting. And, maybe we'll decide that that's one of the things we want to be world class at. But if we don't, we're still going to focus on delivering an excellent, sublime, above reproach level of service in that areas. But we're thinking really critically about where do we want to pour the gasoline? Where can we credibly become the best in the world in the venture studio space? And when there were 6 of us running around, we probably with a straight face could say, by venture studio standards, across these 8 disciplines, you're not going to find anything any better. There's 200 going to 2,000, and the air is going to get a lot thinner up there in terms of like, what is the definition of excellence? So I think one of the things I would probably do if I was remaking High Alpha would be more critical about what are the functions we want to deliver that can be at a minimum excellent and at a maximum literally world class. And let's just do that. There are other disciplines that, yes, our studio companies need them, but we may not be the right people to supply it. Actually, maybe the company itself should figure out how to get world class at that. We talk a lot about making, like the company, we can surround it with all kinds of services and all kinds of support, but at its core, the company needs to be great at making, selling, and serving, right? Like you can't outsource, if you're a product company, you can't outsource product. I don't care what.
I've seen it happen, but yes, I totally agree with you.
And I'm not saying that there aren't opportunities to outsource.
I don't think it's a good idea.
Design and development, but you fundamentally need to have that in your DNA.
Better, yeah.
You fundamentally, if you're a B2B SaaS company, you fundamentally need to have the go-to-market muscle in your DNA. You need to know how to sell, okay? And then finally, if you're a software company of any type, you better be really good at serving your customers, because a leaky bucket is a business that will ultimately go out of business. And people like to capitalize the S in SaaS, the first S in SaaS, and I encourage them to capitalize the last S, which is service. And if you don't build that functionally into your enterprise from day one, you're going to be fighting an uphill battle.
Oh, absolutely. I mean, it's fascinating to me how still this notion of customer success and that world is still fairly nascent. It's remarkable how many people still are, hey, I sold you the tool, like good luck. And even like orienting toward I think there's going to be a shift in business models to putting more of that SaaS revenue at risk based on customer outcomes, right? Because the market's just going to demand it. So, Elliott, would love to get your thoughts, particularly as you think about studios with corporates.
Yeah, I think part of that challenge is when you start a company, there are a million things to do.
That's right.
Right. You need to create a product. You need to sell it. You need to serve the customers. All these things. But you also need to talk to the attorneys and negotiate the lease and make sure you got payroll up and running and you're adhering to all the laws in the different states where you're operating, on and on and on.
Potentially.
Yeah.
Meaning potentially you need to do that, right? I mean, the hard part I see is like some founders don't prioritize the difference between all those decisions on the ultimate success or failure.
Well, and I think that's part of the magic of the studio
Yes.
model, in my view, is right. We want our CEOs, our founders, focused on understanding their customer and building a killer product, right? And the studio can fill in the rest and help and get really good at filling in the rest.
Yeah.
Build some really deep competency in those areas.
That's right. And there are, I mean, Kristian, I think to your point, I don't aspire for us to be world class at HRIS and accounting. I think we want to be really good at helping our founders shape culture in their companies, because I'm a big believer in culture. I mean, just like I'm a huge believer in community, and I fervently believe you build better companies by being a part of the community that you're in along the way, not I'll check in later after I'm done. And so
I also think it depends a lot on how you structure your deals with your co-founders, right? So if you're the type of studio that's taking a 20% slug and your promise is to kind of help around the edges or to work on some of the more intangibles, versus, if you're taking a really substantive piece of equity from day one, there's an expectation that a lot of those more banal things are going to get taken care of and get taken care of really well. And what's really funny is, like, I would say that our less experienced co-founders probably undervalue the importance of having a really dialed in back office, finance, they show up and like everything's spun up, right? The benefits are spun up. It's all negotiated. The payroll's done. The tax filings are done. The audits are, they've never done it. They don't know if it's hard or not. And it all kind of magically gets done, and they kind of undervalue it. I would say our almost counterintuitively, our more seasoned co-founders look at us and go, "Oh my God, thank you.
Thank you." Yeah.
Thank you.
It totally makes sense, right?
Thank you for handling all the real estate negotiations. Thank you for just making sure that the gigabit Ethernet, or Wi-Fi works, or whatever the case might be. I mean, we're supplying world-class office space. I mean, by the way, there's like some serious downsides to this as well. So if you want to hear like why not to do it, I'm happy to talk about that as well. But there's a lot of reasons why to do it. And one of them is, particularly for your more seasoned founders, they just want to get to work. They want to start building product and selling. And if we can wave a magic wand and make all that other stuff, all that heat loss due to friction disappear, that is immensely valuable to them.
So one question I just saw come in about, how long is the partnership? So as you're thinking about, I mean, obviously, and we talk about this a lot with our founders, like we are thinking of ourselves as co-founders with you. We are in this all the way through. We're going to be there. We're not trying to keep you in our office. We're not trying to keep our hands. We're going to be the first ones to pull ourselves out to help recruit and backfill full-time people in. We need to see this grow. If we're stuck in this a year from now, then we're probably not having the success we all signed up for. So how do you guys think about that from setting the expectation? And probably even now you have pattern from, having almost 24 of these, but what the launch trajectory and timeline kind of looks like before they feel like they're on their own. Yeah.
When I saw the question come in, I thought it was a question about the general partnership of the studio and the fund, which I'm happy to talk about that as well. But you're talking more explicitly about how long does the partnership with the co-founder / executive team of the studio company?
Yeah. As far as, well, I mean, you're in the equity stack, so you're in that until the end. But
yeah, well, we're in a pretty substantive way till the end. We break it down. We break down the life cycle of our studio companies into kind of conception, operation, and advising. And the first year, it really is kind of the conception and the launch phase, where we are the overwhelming percentage of the work being done is being done by high alpha, just in terms of a unit hours contribution. We're building the product. We're getting on planes and going to help close deals. We are negotiating, integrated partnerships. We are doing the design, the marketing, the PR, all the back office, boom, boom, boom. And I never, these Zoom cameras are backwards, so I always forget how it works. But the idea is, it's going to look backwards to you, but that's okay. Like our contribution is, think of it almost like 100% of the work that's getting done is us. Co-founder shows up, starts helping with validation. Maybe we help recruit a co-founder, and over the next 12 months, in terms of like unit hours of like, we don't bill for our time, but if you thought of it as billable hours, those go down as we're helping backfill the team. That's the engineering team and the design team and the marketing function and so on and so forth. After about a year, kind of think of like that, somewhere between the first large external fundraising. I mean, and again, sometimes people are doing smaller kind of pre-seed, sometimes they're doing C+ or baby A's. And so I don't like to use the term because that could be 6 months versus 12 months, but let's call it a year in. Our role shifts to more kind of operational consulting. We're still probably delivering a lot of back office. We're still delivering kind of strategic consulting from the various disciplines, but we're probably not taking orders from the CEO the way we were earlier on. At the A round, we're probably getting some pretty sophisticated capital involved. When we found the company, the board is like 4 partners and the CEO. And then we do a seed round, it goes down to 2. And by the A, we usually drop down to 1. By the A, we're moving into more of a pure advisory role. The thing is, though, it's not like board advisory. I would call it like board plus, meaning I look at the boards that I'm on of our studio companies that are post A or post B, and I'm still interacting with their leadership team on a weekly basis, like doing serious work. So interviewing 12 CMO candidates, maybe headed to a conference with them to talk strategic partnerships. So it's, we use the co-founder language, and we're dead serious about it. And what's interesting is a lot of venture studios, and I say knock yourself out, like are adamantly opposed to calling themselves co-founders. They're like, we're not co-founders, that's not our role. And they're organized differently, but we're built to look like and operate like co-founders, and it really materializes in every facet of the business. You talk to our CEOs about how we plug in, say, during financings, and we definitely look like a co-founder.
Sure. So Elliott, as you think about the sort of expansion to more corporates, how are you thinking about any changes to that model from seeding more of that and teaching the companies how to do it versus saying, no, there needs to be more of this handoff. We'll do it the way we've been doing it, and then we'll sort of throw it back over the fence to you when it needs to be scaled.
Yeah, we've got a good degree of confidence in the playbook at this point, but also some big open questions and some things that we think we could do better. Right? We've 5 years in, I think we're better than we were a year ago. Certainly better than we were 5 years ago, just in terms of the way that we operate, the pace and the pace of businesses that we launch and so on. I expect we will continue to get better. So one of the things that gets me really excited about the building venture studios with corporate partners, and we're on track to build 3 of them this year, is it's an opportunity to experiment with the model some more, right? So we've got some kind of foundational core beliefs relative to this venture studio model that we apply, but there's plenty of room for innovation in the model at the margin. And that's what we're doing with some of these corporate partners. And that's, in fact, one of the reasons we're doing this is that we can run faster cycles of iteration on the studio model and get better and better at running venture studios by launching them at scale with corporate partners.
Sure. So I know there's a question which I'll let you answer. As you think about the industry evolution, do you see more specialized, specific sector focus, which I think we've seen more of that, or sector agnostic? But any thoughts there? And I think we're coming up on time, so I'll
I think our thinking on this is that the venture studio category is going to map very closely to the rise of accelerators. And if you look at Gen 1 of the accelerators, they were totally industry agnostic. And now I don't know what generation we're on, but I think there's 179,000 squared accelerators around. So, necessarily we saw a ton of specialization. Techstars split the difference. They have some kind of branded kind of the name brand Techstars accelerators that are in the big markets tend to remain industry agnostic, but then, the biggest part of their business and the fastest growing is their corporate partnerships that are either tied to the industry of their corporate patron, or they have several brands that are backing an industry specific accelerator. I believe that the best accelerators in the world are still kind of industry agnostic. So if there's Y Combinator, which one could argue is the best. There's kind of Techstars Boulder or San Francisco or New York, which, again, whether you agree with me or disagree is beside the point, which would maybe be number 2. And then it falls off pretty freaking quickly after that. Like even the top 10, right? The difference between 3 and 1. And, when at High Alpha, we're totally focused on SaaS, but we're totally industry agnostic. And we think that's the way to go. And, if I could wave my magic wand or write the press release 10 years from now, I would like High Alpha to be the Y Combinator of venture studios. And so I like their playbook a lot. Clearly there's some stuff begins to break down with the metaphor because venture studios are not accelerators. But yeah, there's no question. I mean, I think as more entrants enter the field, as people become more opportunistic, it only makes sense that you're going to see a significant portion of them get very specific. I mean, the work Elliott's doing with the corporates by nature of who he's working with, I think Elliott, you chime in here, but my assumption would be that the majority of the studios that you're going to have a hand in standing up are going to be industry specific.
Yeah, I think every studio that we see succeeding has some type of focus. It might not be by the level of the industry, right? But it's some type of focus. In some cases, it's geographic. And for us, it's B2B SaaS. In other cases, it might be something else, but there's always a defined focus.
Yeah.
So hard to succeed without that because you don't get the economies of scale and the pattern recognition and the capabilities that get built up in the background if you don't.
So
Elliott, I'm so glad you mentioned that. You're so right. And we see it already, even in the early innings with the venture studio industry. If I was to put a list together of what I thought the top 10 ones were, I would be able to tell you their specific focus. And I think Elliott knocked it out of the park. Sometimes it's geographic, like we're in this city or we're in this region. Certainly, sometimes it can and will be, I think, increasingly an industry focus. I'm not sure what you call the other one, Elliott. Like at High Alpha, our focus is B2B SaaS. We'll stand those businesses up anywhere and we'll pursue any industry, but we're not doing
type of business model. Yeah, and there's some that are hard tech focused in an area, for example. There's always some kind of thing that ties it all together.
That's right.
Yep. So as you think about starting a studio, not doing it differently, but what do you think the sort of minimum viable version of it? I mean, you guys, Kristian, you guys had the luxury of somebody coming along and giving you more than you even were planning for. What do you think the sort of minimum viable elements are to actually execute on a studio model?
Elliott, you've thought
I
about
thought Kristian, you're after you. I can take
I mean,
that.
You're probably more in the throes of that now.
We are about to launch 3 new studios, so we're thinking through this right now. It really depends on the level of support and service that the studio is going to provide and how you define it, right? And the amount of equity that the studio is going to take in the companies determines that to some extent. When we think about our playbook and taking some of the core elements of what we do and deploying in a minimum model. It's probably about a dozen people, to be honest. And we think about the in terms of the breakdown of what those roles are. And that looks, funny enough, looks a lot like High Alpha in its early days. And maybe that's where our experience is biased because that's what we know. But yeah, for us, it's not easy to launch businesses. It takes a lot of people, a lot of time, a lot of effort. And
but I'll tell you, I could name a couple of individuals who have been acting in a studio-like capacity for many years, just figuring out how to get involved early, lend their network, maybe their particular zone of genius, some capital, and have built portfolios that look they've synthesized the studio model nicely. So the answer being, I think you can go all the way down to one person.
Sure.
The economics of those deals look significantly different, and focus becomes even more important. Like, what's the one thing one person is going to be famous for? But you saw this a lot. I think a precursor to this was you would see particular or experts in particular disciplines. You saw it more in the Bay Area. It might be like a famous UX designer that was able to command equity ownership in 24 companies by kind of advising their product design teams. That's a version of that, right? And maybe more recently, I won't name any names, but I could name a couple of people around the country that have amassed unbelievable positions on amazing companies' cap tables by being there at the beginning, and in some combination of writing an angel-sized check, opening their network, and their own, not to take anything away from their own kind of genius and abilities, but so at its extreme version, it could be one person. At its most. At the extreme on the other end, you've got a rocket internet, right? You know what I mean? That's a legit factory with hundreds and hundreds of people just at the mothership. I think the answer is dependent on what you want to achieve. You want to achieve single-digit equity ownership in lots of company, or do you want to own majority ownership of maybe a smaller number of companies? But that's going to require a much different value proposition around resourcing to your co-founders.
Sure. We're going to continue to see so much experimentation over the next few years. It's still the Wild West.
It's early.
Right?
Well, that was my experience when I first started talking to you guys and a number of other people a year ago or over a year ago now, which was I'd talk to one and I'd just get another example. It was just like, as I said, you meet a venture studio like that. I think still like, GSSN still trying to figure out this like buckets of who, and I think it's more of a continuum, almost like you described, Kristian, from one person with a particular skill set all the way to something that's it could be an operating. I mean, I see a model where you could have an operating company that is your cash cow, that is a revenue generating entity, and you're just taking every dollar of profit that you can possibly generate and investing that into new company formation. That could be a model that we start to see from, it's Amazon to some extent, right? But I could see that. And then if you have a company that doesn't really perform, you maybe just absorb them back in, right? I don't know. I think there's going to be, to your point, a ton more experimentation. So it's pretty
I think
fun to be in it.
Structurally, it's wide open. The economics, the structure, the functions. What we are seeing now is that as we talk with other venture studios, and I think you've seen this too, there are certain elements in terms of certain components that you see in every studio that's succeeding, right? We talked about how we run Sprint Week. So this idea of forcing functions that force you to launch or take action, right? This idea that you've got a team that knows how to do this. You've got an area of focus. You've got dedicated capital for investment. There's certain key elements that you see across all the studios where it's working. So lots of variation on the structure. Still, but some things are I think are must-haves.
Yeah, makes sense. Well, final thoughts. This has been awesome. Thank you for your flexibility that we, pulled this thing off LinkedIn and we're just going to shove it back out there as a recorded Zoom. So we got a good couple dozen people join us, which was awesome live. And then we'll get it out there to some other folks as well. But any final thoughts you guys have?
This is great, Carey. Appreciate it. Always fun to chat.
Tickled to be included. It's great to see you again, Carey. And to see some familiar faces and some new ones. One of the things I love about this community is, at least at this stage, it's explicitly non-competitive. And people have been so willing to open their kimonos, and we endeavor to do the same and to overshare and be supportive. And so opportunities like this are fantastic. I just hope I get invited back to be kind of in the audience next time.
For sure. And guaranteed. And thanks again, guys. It's been great to see you. Hope to get to Indy sometime this year, and we'll hang out.
All right. Take care,
So,
folks.
All right.
talk
Be
soon.
well.
See y'all.
Cheers.